The South African Chamber of Commerce and Industry released their business confidence index for June earlier today. The BCI improved slightly to 86.6 in June from its lowest level for 2011 of 85.8 in May. Here to analyze these numbers with us is Neren Rau, the CEO of SACCI. Thank you so much, Neren, for joining us today.
Thank you.
Okay, so a little bit of optimism coming through, but we've got to take into consideration that we're coming off a very low base for May 2011.
Absolutely. May was a dramatically bad, surprising month. It was so poor that it even betrayed April, which is usually the month of the year that holds the record for being the lowest performer. And this time round, all we've recovered, I'm afraid, is just the level that was required to get us back on track in terms of April. So we're back to 86.8.
So take us back to the month of May and to April as well, and some of the key factors. I know that manufacturing and construction keep being the laggards in the overall sentiment factors, and we know that we are expecting some kind of optimism to feed through by the end of the year, but it hasn't really been reflected in share prices firstly, and of course in the BCI as well.
Quite right. Manufacturing did build up in recent BCIs, and we thought there was potential for manufacturing to be a driver from the supply push side, but that's not showing up this time round. Once again, we find a negative reading from manufacturing. We have a negative reading from construction, a negative reading from imports. Imports and exports typically playing musical chairs from one BCI to the next, and neither of them finding the simultaneous positive direction that we saw a few months ago, which we were hoping was the beginning of an established trend, particularly from the point of view of South Africa's involvement in global markets. This time around, vehicle sales and retail sales positive, but marginally so. And as you've indicated, on the financial side, some improvement, but inflation still showing negative against its long-term trend, and so are share prices against a long-term trend. Okay,
well, let's touch on domestic demand, because that is improving quite significantly. I mean, we saw it declining by 2% in 2009, and it averaged 4.5% year on year in the last 5 quarters up to March 2011. That is quite positive overall. So that is one positive factor, but we know that we're seeing a bit of a disconnect with credit extension though.
Correct.
And that, of course, is affecting sentiment down the line.
Those two factors were key in terms of our assessment of this month's performance. You had consumer demand improving, you have consumer confidence also showing positive numbers, but it's against a backdrop of low credit extension numbers and against a backdrop of low employment numbers. So the sustainability of the consumer contribution to improved business confidence is highly questionable in terms of the future. So again, we have to stick with our previous prediction that the positive outlook for the BCI and economic activity broadly would shift to the last quarter of this year at the earliest. So between now and then, it's going to be a rocky road.
Well, we also know that fixed investment coming through, not only from the public sector, but from the private sector, is also quite indicative in terms of the confidence in the overall economy. And that has still been very subdued. When are we expecting a significant recovery, and where are we now relative to some of the historical numbers?
Well, I'm sorry to raise this factor, but fixed investment is not going to improve dramatically if we continue with discussions around nationalization and other policy issues which are deterrents to fixed investment, deterrent to both foreign as well as domestic investment. And we need to critically address the policy signals that we're sending to our investors, both domestically and internationally. There's typically a focus on the international, but I want to emphasize that domestic investors are equally scared off by discussions around nationalization and the high publicity that those discussions are drawing. So key to encouraging investment, key to sustaining ongoing confidence from consumers as well as business is clear policy direction, strong leadership from government in those issues.
The truth of the matter is that, yes, private sector investment and public sector investment contraction last year. We saw a very sharp contraction in 2009 and coming through in 2010. Where are we now? We're sitting in positive territory at least.
Yes, we are in positive territory, but again, the outlook is questionable. I'm afraid for very few of the BCI subcomponents can we give a firm positive. They've just been juggling around too much in recent months, and typically speaking, it's been characterized by some of the domestic components of the BCI showing positive in 1 month and then turning negative in the month that approaches. And typical of that was manufacturing and construction, both of which were positive in the previous month.
Let's touch on some of the big global macro factors, which we know are very top of the agenda for a lot of the corporates and business minds out there. So we've got the Greek sovereign debt crisis, or the European sovereign debt crisis. We've got very low unemployment levels that are still showing a negative growth rate in the US when it comes to things looking better there. We've got inflation, which is a very big problem, and then we've got a very strong local currency. Which of those three factors have actually been the biggest worry for investors out there?
I'm afraid that it's difficult to pick on one factor. I think it's a convergence of factors if you're looking at South African investors. I think with global investors, it's a lot easier to point to the challenges in Europe as being their primary concern. But South African investors tend to take a broader view of the world and our relationship with the world. And that is why we've emphasized very strongly the import and export components of the BCI as an indicator of our relationship with the world. So from a domestic economy point of view, I would say the global events are a concern, but there are many risk factors that they are focusing on domestically, and I think at the height of that is more the policy issues and the lack of policy direction, which I hate to continually beat that drum, but that's a fact in terms of our relationship.
Until we see clarity on there, we actually see a benign BCI number going forward.
Absolutely.
Fantastic. Neren, thank you very much for joining us. Much
Thank
appreciated
you,
for your time. That was Neren Rau, the CEO of SACCI.